Hey, hi everyone. My name is PK. Here I have Mike, who's a client of the Property Investment Accelerator. In this video, it's a really unique one. Mike is very graciously going to take us on his property journey. He now has 6 investment properties, 5 through the Property Investment Accelerator program. He bought them all basically in the last 2 years. His goal is $100,000 passive income. He's well on his way. And, in this video, we'll talk about where he bought, how much, what the rent was, how he did it, how he achieved all this so quickly. But without stealing too much of your thunder, Mike, thank you for, like I said the other day as well, thank you for making time.
Thank you, just a pleasure. As you also mentioned, around 2 years, less than 2 years ago, I joined your course, and I did your course, and I'm very happy with the results. So far, so good. Yeah.
No, thank you. And maybe just to paint a little bit of a background or picture for everyone, like what got you interested in property investing? Why did you do my course? You'd already used a buyer's agent before. Like, just what's the kind of background to all this?
I migrated to Australia a couple of years ago, and the very first properties I purchased in Australia was a house and land package. It was my home, actually. But after that, I realized that it wasn't the best choice. Because of the passion that I had about property, I decided to become an investor. So at that time, it was early 2020. I found a buyer's agent, and I purchased my first investment property in Brisbane and in Logan area. At the time, I didn't even know where Logan is. So after that, after I purchased my first property, I told myself, so what's next? What should I do now? What's my goal? So I realized that I don't have a specific goal. I don't have a specific plan, strategy. So I decided to educate myself, and during that education phase, I established a very clear goal for myself, short-term and long-term. The short-term goal was that by the end of 2022, which was like 2 years ago, to have 5 investment properties. And by the end of 2030, which was a longer-term goal, to have a passive income of 100K per year. I started researching here and there in the internet, Facebook groups, and finally I found you. It took me about 3 months, I guess. I was in doubt to do the course or not, and finally I did. And I decided to have, doing that course, I decided to have control over my journey by myself and to be captain of the journey myself. Yep, rather than a buyer's agent or Facebook members.
No, fair enough. And like we were talking about it the other day as well, I think you were contemplating my course and contemplating your strategy for a decent 3 months before you decided to sort of take the leap of faith, so to speak. I'm obviously glad you did. And I mean, let's go through your portfolio to see how it's eventuated. So in terms of your first property, where did you buy that through the course, that is? Where did you buy that? Please run us through, I don't know, the purchase price or rents and things like that.
Yeah, sure. So if you remember, when I wanted to do the course, one of the hesitation was that I was too shy to talk to the agents. I was too shy to negotiate, and that was actually my problem. But interestingly enough, my first investment property through the course was an off-market property in Bendigo. So that property had renovation potential, subdivision potential, and but I purchased that property 333,000 333, and the rent at the moment is 400 per week. Yeah, I haven't done any renovation or subdivisions for now, but my plan is in the future in a couple of years, do that to for the time that the market is flat, that uplift the value.
Yeah, perfect. So you got it for 333, rented for 400, and what would that be roughly worth now?
The CMA is saying that around 450 to 500. Yeah, I would say, yeah,
Okay.
450 to 500K.
All right, so about $150,000 gain in just over 2 years, or sorry, just over 1 year.
1.5 years, I guess.
1.5 years.
I did your course September 2020, and I purchased that property November 2020.
Okay, perfect. So no doubt there's plenty of equity in that one. And so then when did you purchase your next one?
For my next one, I decided to go to Adelaide. At the time, Adelaide market was showing, the data was showing very well, and as a couple of suburbs was good at that time. And yeah, I went to the Adelaide market. Even at that time, it was very hot market. I purchased a property with subdivision potential in Paravista in Adelaide. The purchase price was 440. I spent about 5,000 as a cosmetic renovation on that property, and I think it was April 2021. Yep.
Okay.
The rent at that time was 420. Now, according to the property manager, the appraisal is 450, 60, and renewal gonna be next month.
Gotcha. So another sort of positive cash flow property. And I think you said it is also had subdivision potential. You did a small cosmetic reno, which helps. And what would be the valuation? So you got it for 440. What's it roughly at the moment?
The CMA is saying around 600. Okay.
600. Okay, so that was March, April 2021. We're in April 2022. So 12 months, $160,000 of growth. And, you know, this is the power of you're in Melbourne, you know, your principal place of residence is in Melbourne. This is the power of borderless investing, because there's no way you can get that sort of return on a percentage basis. And you couldn't have done that in Melbourne.
Well, my home in Melbourne hasn't done that much.
Yeah, yep. There you go. Cool. So you're off to a pretty flying start. Where did you buy next, and what were the details?
Next one, by the time that I was ready for my third property through the course, or my fourth investment property, the Brisbane market had become hot for that Olympic things and sentiment change for Brisbane market. The data was getting better, and I wanted to purchase a property in a coastal suburb somehow. The goal was that to have a property within walking distance to the beach. So I purchased my next one in Deception Bay in Brisbane. It was last December 2021, and actually that one was an interesting story. The property came to the market just like 1 hour after I saw the property. The tag was 1 hour ago, and it was like 6 p.m. the afternoon, Wednesday. The first open was on Saturday. So I contacted the sales agent, started negotiation, unlocked some story behind that, the vendor expectation, vendor motivation and things, and I could lock the deal just tomorrow morning. That sales agent called me and said, congratulations, your offer was accepted. Yes, that property I purchased 560K. First open home had 2 offers above 600. However, because of the terms and conditions that I had offered for that property, the vendor liked my offer, and even the other actually bidders that had higher offers wasn't successful. Yeah. So the rent for that property was actually is 500 per week now. 500 per week. It's got some depreciation also, so I believe it's like a neutral yield. And now the CMA is saying roughly about 650K.
650.
Yes, yeah. So
it's a really good point that you made. You know, there was other offers that were more higher than what you had given, but I just want everyone to understand there's two things in an offer. There's the price, which is obvious, and then there's the terms. And if you can make your terms as attractive as possible, you know, as you did, Mike, you broke down the information asymmetry barrier between you and the vendor. You understood what actually drives them, why they're selling, what their goals are, what their needs are, what their desires are. If there's anything that they're you can use to leverage against them, any information they accidentally spill, then that is the way to get the price down, even in a hot market. I mean, I think the Brisbane property market grew by about 15%, if I'm not wrong, between September and December in 2021. So that's really the last quarter was really where it started booming.
yes.
And you got it just at that time, and it was a hot market. It wasn't easy to buy. And
yes, yeah, exactly. As you said, that negotiation helped me to know what vendors' expectations is, and the vendor, it was close to the end of the year. They wanted to go on a holiday, and they wanted to have that peace of mind, you know, over the holiday, and they didn't want you know, have the contract crash. So the terms and conditions that I put forward actually helped me to lock the deal. Yes.
Yeah, no, so good to hear. And so that's worth 650 now. You got it for 560, so that's $90,000 of growth in 3 months, 4 months, I should say, 4 months. You know, that's so let's say to buy that property, you put down $90,000, which is probably what you would have put down or thereabouts to buy that house, including transaction costs. Then you've got 100% cash on cash return in 4 months. I'm not saying, guys, that anyone can get this at any time, but that's a pretty good deal, and it's hard to say no to that. Okay, so you sort of waited, 9 months between the Para Vista property and the Deception Bay property. Where did you go next?
Yeah, so actually the reason for that delay was I wanted to extract the equity from the previous properties, to get ready for that, to analyze the market. So it took a little bit of time. Then for my fifth investment property, or the fourth one through the course, I went to Toowoomba, regional Queensland, and I purchased property. So it was 385K. I negotiated 5,000 after the building and pest inspection for that property, so 380K, and the rent is 400 per week. Gotcha.
And so that was in February. So now you have three properties in Queensland. Are you paying land tax in Queensland, or was that a consideration?
No, but that time no, and it wasn't my consideration. Actually, when you want to invest, you need to kind of like be ready for some small costs to get bigger rewards. I'm not scared of a little bit of higher interest rate. I'm not scared of the paying LMI for some properties. Even I paid twice LMIs. I wanted to extra equity go faster, so I paid twice LMI. So, but it helped me. Even considering that, I did very well for those deals. Even with land tax, it wasn't my consideration, and I know that's going to be a small cost as a cost of business.
Yeah, that's such a good mindset to have, because it's a cost of doing business, as you said. You know, if you're thinking, I don't want to pay LMI twice, then you're not able to buy that property. And even this Toowoomba one, I mean, it's positive cash flow. So basically all your properties are positive cash flow, except the Deception Bay, which is neutrally geared. And you bought it for 380. I don't know what it's worth at the moment, but just by understanding the Toowoomba market generally, I think in the last 2 months, you know, this would easily have a 4 in front of it, probably 420. I don't know what your CMA says.
I haven't checked, yeah, but I would say easily about 400. Okay?
Yeah,
easily about 400K. So I'm happy. I was happy with the result for that property. Also, in fact, that property is 750 meters square, and again, subdivision potential is 25 meters wide. and it's got a big backyard again for granny flat potential, so I can easily put a granny flat at the back if I want to increase the rent and the income, and that property also has got the potential. Yep.
I really like that actually, because that's sort of a common theme in your properties. They all have some sort of potential. So the Bendigo one, you know, there was a subdivision potential and reno potential. Paravista, you did the cosmetic reno and there's subdivision potential. Deception Bay was great, and the Toowoomba one's got granny flat potential, 25-meter street frontage. So like that's personally how my portfolio is as well. Everything had some, you know, even if it's not huge, just some value add potential. Because, you know, don't let, you know this as well as I do, Mike, but property markets don't always do this. You know, they can go like this. So, and there are times where it's flat, or maybe even dipping, you know, 4 or 5% happens, right? We have to, you have to understand this. That is when you add the value and continue to go.
Exactly.
And I'm going to come back to that point on, because I think everyone will be interested, you know, like how did your borrowing work? How was your borrowing capacity affected? How were you able to buy something? I'll come back to that, but maybe just the last property, which, you know, we're still buying in this part of Queensland, but just maybe take us through the numbers.
Yeah, so the next property, again, in regional Queensland, that property I purchased 290K. Again, this property has got renovation potential, and dollar occupancy potential also. I've done the search with the council. I can put a granny flat or second unit on it easily. And yeah, that also, the purchase price was 290. The rent is at the moment 280 per week. However, next month the lease is gonna be ended, and I'm doing the renovation project on that. And according to the property manager, the rental appraisal after that is gonna be 280 per week.
280 or 380?
380.
380
per week. So the renovation cost is going to be less than 10,000, bringing the price to 300K. And comparable, CMA is saying that the comparables are around 330, 340K after doing the renovation. Yes.
Gotcha. So you paid, so let me get this right. You paid 290, you do a $10,000 cosmetic renovation. So you can say that the purchase price is really 300 and then the market rent is 380. So hugely positive cash. I can't do that in my head, maybe close to 7% or 6%-ish yield. 7%, yes. 7%, yep. And then the comparables, because you've put in 10,000 reno, the equity it gives is more than just the 10,000. It brings it up to 330. And I would sort of hazard a guess. I know you just bought it last month, but you know, this particular part of Queensland, it's pretty hot. So maybe, you know, by the end of this month, you know, when you have actually done it, it might even be touching 350 in terms of its valuation.
Yeah. So yeah, that one was my last property. However, as you remember, the initial short-term goal was 5 property by the end of 2022. Now I've got 6 investment properties and still halfway to 2022.
Yeah. I mean, you've smashed your goals. It's so good because, I mean, it's not every day that someone buys 6 properties in 2 years. And I think the thing that strikes me the most is you yourself said that, you know, you had migrated to Australia. You weren't confident, like you're a little bit shy and speaking with agents and things like that. And so from going from that position to then having this multi-million-dollar portfolio with, you know, it's giving you tens of thousands of dollars of passive income. You're on your way to $100,000 of passive income in the next 8 years. Like don't you feel like it's such a transformation? Like it's, I mean, I remember talking to you back then and you were like,
certainly. I'm also surprised. I didn't expect the course helped me that much. It accelerated, actually the name also says that it accelerated the journey. I would definitely, I could do that with the passion that I had for property. I could do that, but maybe 5 years later to get the goal that, you know, the position that I'm now without doing the course, maybe 5 years later, but that accelerated. I learned a lot, negotiation, the finance, clever finance, as you mentioned in the course. And many other things that helped me to get to this position here.
And just like me as well, like you've been renovating cosmetically interstate, you know, without sort of catching flights or anything like that. I think the thing that probably everyone's is thinking is, how were you able to fund all of these purchases? Obviously, you know, you have a job, which helps. You obviously have a family, a growing family at that. So in the bank size, that doesn't help, but you know, it's a good thing. But like, how many times did you refinance? Like, just talk us through how you're able to get all of these loans.
Yeah. So a strategy development is the best. I would say the best part of the course is strategy development. Once you have a strategy and you know where you're going to be step by step, and it's very clear that what you need to do. So, and mortgage broker can help you with that. So the I would say the equity that I took out from my principal place of residence, and I purchased my first one and little bit of fund for second one. After that, I didn't pay any money out of pocket. All it was from the equity, first property to next property to next property, and so that I'm now here. Yes,
that's amazing, because you hear about that, like you theoretically understand that, oh yeah, you know, if a property price goes up, you take the equity, you buy the next one that's meant to go up, and you take the equity, buy the next one that goes up. Like theoretically it makes sense, but like you're sort of living proof that in practice it actually works. And the thing that I just want to labor for a second for everyone who's watching and listening is that, you know, Mike initially took that equity out of his principal place of residence, you know. So I mean, the background that I'm from, South Asian, and I know that the Asian background also has this mindset. I don't know about the Middle East and places like that, Mike, but the mentality in finance is don't have debt, you know. Buy your principal place of residence, paid off, and then it's like only poor people have debt. But you've done the exact opposite. You've leveraged someone else's money, call it debt, but it's really just someone else's money, and built yourself a portfolio. And I mean, the thing is that then there are naysayers that say, well, you know, Mike, you're sitting on all this debt and interest rates will go up and it's going to be a house of cards and it's going to come tumbling down. But I mean, I'll ask you point blank, if interest rates go up 1%, let's say tomorrow, overnight, they've gone up 1%, does that impact your ability to hold this portfolio?
No, because right now I'm in a position, actually, as I said, I'm working for cosmetic renovation for two projects, my first investment property and my sixth investment property. The project is going to be finished next month. But by that time, my positive the cash flow that I'm going to have is above 20,000 per year, which could be equivalent to at least 1% interest rates rise.
Yeah. And that's the idea, right? Like you've got that passive income, you know, bring on the interest rate rises, but the next year, the following year, the next year, and 8 years from now, which is your goal, 2030, we know that rents are going up. Rents will, I mean, I can't predict the future, but let's say they go up significantly, which history tells us they do, and the growth continues to occur, not at the same rate, like it's not sustainable, but it will continue. Then, you know, it's a long game. And in the 30s, then hopefully we can do another video and you're not having to work, or you've reduced your hours or something, or your wife's not working, you know, something like that. That's the goal. Yeah.
And having said that, we actually went high income earner, I would say an average household income in Australia, and all it was about the strategy, clear goal, focus, and action.
Yeah. I think that's the recipe. That's kind of what I gleaned from you. The two ingredients of the recipe was passion. You yourself said that you probably could have achieved all this, but it would have taken you 5 years. Exactly. So passion was definitely one. You had that, but then strategy, you know, numbers, data, that's where the accelerator course kicked in. And so, you know, mixing those two ingredients up, stirring them, that's what got you in this position. And I have to ask you this question, Mike, you know, you went with a buyer's agent initially. Why, you know, in hindsight, would you have gone with a buyer's agent initially, or if you would you have just done the course? Or maybe another way to ask that same question is, for people who are out there thinking, you know, like, sounds really hard, I'm not sure if I want to do the course or this and that, what would you tell them about being empowered? What would you tell them who are sitting on the fence about doing the course versus not doing the course?
Well, I would say if you want to spend like 10,000, 15,000 per property that you want to buy, and you don't have that much time, and you don't want to have control over your journey, go to buyer's agent. However, normally buyer's agents are offered order takers. So you tell them, I want to buy a property, they want to buy, and then they're going to buy a property for you, find the property for you. But if you want to accelerate your journey, if you want to learn how to set a goal, establish a strategy, and you want to know every aspect of this investment journey, you need to do a course, and you need to actually, better to say, you need to educate yourself. It could be PK's course or any other course, but you need to educate yourself. You shouldn't go blindly. Yep.
Yeah, I like the way you said that, and I think I always say, like, educate yourself for free. First of all, educate yourself for free, just like you did, Mike. I think you were educating yourself, and that's kind of how you came upon what I do. Do it yourself, because you might figure out that actually I can do this myself, in which case, keep your money in your own pocket and give it to me. But for people who are just going round in circles or want certainty, they're scared of making mistakes, living in Sydney, Melbourne, they don't want to catch flights every weekend. They want to do this with a proper team using data. Then that's really where the course kicks in. And yeah, like Mike said, it takes passion, and it takes, 3 to 5 hours a week. If you don't have one of those two, just go to a buyer's agent. There's more than 3,000 or 4,000 of them that are happy to take your money. But, the course is for people who are actually determined to achieve something in their financial lives. They have this focus, or they want to develop that focus. It's a very, I don't want to say it's a unique person, but it's a special person who really takes the bull by its horns and achieves financial independence. It's not a cheap thing, it's not, otherwise everyone would be achieving it.
Yes, yes. I wouldn't say it's easy. You need to sacrifice, you need to focus, you need to concentrate. Yeah, but definitely, as you did, as I did, definitely everyone else also can do that if they have that passion and motivation. Yes.
Perfect. Well, look, I just want to congratulate you once again, Mike. 6 properties in 2 years, 5 through the course, passive income and capital growth, and, subdivision potential and positive cash flow, 4-sided diamond. You've kicked the ball out of the park. I just ask one last question for everyone. If someone's sort of thinking, I really want to invest in properties like Mike did, I want to build a portfolio like that, what are some tips, apart from just do the course, what are some free tips that you can give them from your now experience? Because you're also becoming a mortgage broker. You're so passionate about this that you're becoming a mortgage broker. I might leave your email or something in the comments or in the description, but you're actually like a professional now. So what are some tips that you can share for newcomers?
So first of all, I would say, you need to know what you want to achieve, both short-term and long-term. Once you made that clear for yourself, you need to make strategy. That strategy will definitely help you to go step by step to actually build your portfolio. If you have that passion, that goal, and the strategy, and not being, you need to, you shouldn't listen to here and there over the barbecue, chats and everything, your friends says, even your family, anything that, no, this is the interest rate rise, this, you shouldn't pay that LMI. Never be scared of that. As long as you have that goal and you have that strategy, you know what's going to do, you're going to be successful. Yes. And as you said, yeah, so as part of my short-term goal was that after building my portfolio, I wanted to run my own business. The passion from the property put me in another way to become a mortgage broker. So now I have that peace of mind to work more on my business. Now I have 2 kind of like business, one property investment business and then mortgage broking business. So hopefully I can help so many clients to make that strategy as my mortgage broker did for me. Yeah.
Amazing. Amazing. I like how you said both short-term and long-term. We always want every single property to give short-term growth and long-term. That's just essential to build a portfolio really quickly like you have. And on the mortgage broking bit, I'm sure you'll become a fantastic broker, Mike, because I mean, like you said, you are on a quote unquote average income and you've built this portfolio and you're not stopping, you're continuing. So
yes.
It takes particular techniques, nuances, and strategy to, not limit your borrowing capacity, refinance again and again. So, I mean, you've lived and breathed it. It's not theory for you. So I'm sure you'll do a fantastic job.
Thank you.
On that as well. And guys, I don't think the business is actually officially set up yet. Correct me if I'm wrong, but at least I'll leave Mike's email below.
Yeah, so it's very close to be set up officially, probably next month. However, I'm happy to, anyone who would reach, I'm happy to actually help them. Yes.
Awesome. And Mike's a nice guy, as you can see, so I'm sure he's open for a chat anyway.
Yeah, of course. Well, another good thing about the course is that you have access to a broad community. Now, I'd say many of members of that community are my friends. Now we chat, we have meetups, we actually help each other to find properties for ourselves. So yeah, that also is another positive of the course, that community.
The community aspect is so nice. And just on that point, I'll for everyone watching, I'll post Mike's properties in our Facebook group, which is obviously free. It's different from the paid community, but there you'll see everyone congratulating him and you can find out more about his properties as well. Well, hopefully that brought you guys a ton of value. If there's any questions you have, you can just reach out to Mike or leave in the comments below. Both of us will happy to answer them. Subscribe to this video, hit the like button, turn the notification bell on, all of that good stuff. But once again, Mike, thank you so much for your time. Thank you for believing in me. And yeah, I believe you can definitely achieve your 100K passive income in the foreseeable future.
Thank you very much. And thank you for the support that you always had and you're going to have also.
Okay.
Thank you.
Thanks.